Hello, Stuart.
Yeah, I did ask.
Oh, there she goes.
There she is.
Just a hint that I can barely hear. Maybe Orn.
How's that?
That's much better. Thank you.
Sorry.
Are we at 5 o'clock?
Yes.
Yes, we are.
Okay, I'll call the town council meeting to order at 5 p.m. on the special meeting on April 29th. And I'm going to turn the chair over to someone in the room. I understand there may be a volunteer. Is there?
Yes, your worship, I have put my name forward.
Okay, I'll turn the chair position over to Orn Ford. Thank you, Orn.
Thank you, your worship. As meetings called to order, CEO Miller, is there any additions or deletions to tonight's agenda?
No, there isn't. Thank you.
Okay, I'd be looking for a motion then to adopt the agenda as presented. Councillor Good?
I understand that we are changing the order of the agenda, however.
Yes.
Okay. I move that we adopt the agenda as presented with change in order.
All those in favor? And that is carried. So next on the agenda, CEO Miller, do we want to move to that item now, or do you want the presentation first?
If you wouldn't mind, if we could move to that item, that would be great.
Okay,
I'm gonna
so
be a
we'll move
bother
to-
and ask that everybody speak up a bit, please.
Yes, we will. So we're moving on to new business, item number 2, developers request for a letter of support with Alicia Modi.
Good evening, everyone. Thank you for letting me go first. All right, so before you this evening is a request for council to provide support to allow the mayor to sign a letter of support for a developer for the development that is proposed development between No Frills and the GM dealership. The administration and Mayor Manser did meet with the developer's representative in early April, and out of that meeting, we have drafted this letter to try and provide as much support in writing as the town can to help the developer move their project forward and secure financing. So we have prepared a draft letter for council to review. And we would request that council make a motion to enable the mayor to sign the letter, and we can send that along to the developer. If the letter hasn't captured exactly what council's position is, to please specify any changes that might be required to allow you to support it. Or alternatively, council could choose not to provide the letter from mayor and council. I can take any questions that you might have related to the letter.
Thank you, Ms. Modi. At this time, I'll turn to Her Worship the Mayor, if she has any comments.
Thank you. No comments. I think the briefing note basically describes the discussion and the proposed go forward.
Is there any questions from council? Seeing no question, would somebody like to make the motion? Go ahead, Councillor Wojciak.
I'd like to make a motion that council enable Mayor Manser to sign the letter of support addressed to Dukin Industries Incorporated regarding their proposed mixed commercial residential development at 7513 and 7601 100th Avenue, Peace River.
All those in favor?
In favor.
That motion is carried. Thank you, Ms. Modi.
Thank you.
So moving back on our agenda, we're now at presentations. So I'd like to invite the Matrix Group LLP to come forward to the table, and if you can turn on the mic, speak clearly so that our worship can hear you, and just state your names for the record, please.
Oh, sure. Okay, how am I doing for sound? Am I good? Hear me? Louder?
We're good.
Okay. Like echoing back in here. How's everyone doing today? Good.
I'm better with you.
I'm cheery after my 4-hour drive here, so. Thanks for having me. All right, I figured out to put this on. Am I live on YouTube at all or no? I have. Oh, yeah, I can do that. My staff are gonna be watching me and then giving me the ears later. Okay, so do I have to go to like full screen or just stay with this? Which one? F5.
Just as long as I can see the mayor.
Oh, there.
There we go. All right, figured it out. Okay, well. All right, well, thanks for having me here today. My name is Jeff Ellis. I'm a partner with Metrics Group. So responsible for our firm services to the town in relation to your audited financial statements. So usually to begin these presentations, I usually do a bit of an overview of an audit. So why we have an audit and really the importance of it. And really it's to enhance the degree of confidence of those intended users of the financial statements. So those users being yourselves as councillors, ratepayers, province of Alberta municipal affairs. So those individuals or organizations with a vested interest in the financial performance of the town. This is achieved by us as auditors expressing an opinion So we give assurance that the financial statements are free from a material misstatement. So what that means is auditors, we seek reasonable assurance. So it's a high level assurance, but it's not absolute. So we do not audit every transaction that happened during the year. Also, with auditors, we exercise professional judgment, maintain professional skepticism. So with questioning mind, stay alert to conditions which may indicate possible misstatement. So such as cutoff, we want to make sure the transactions have been recorded in the correct fiscal period. We're looking at revenue recognition, making sure revenue is being recognized when services have been rendered or performance obligations have been met. And then collectability of accounts receivable, so making sure your receivables are deemed to be collectible, or should allowance be associated with any of those. And then also critical assessment of the audit evidence. So if we've received any third-party information to corroborate amounts, or has evidence been altered that we've been looking at. So again, making sure that the audit evidence is accurate. The next part here, talk about your independent auditors report. So on your financial statements, page 3 and 4 there, we give our opinion at the top that the financial statements present fairly in all material respects the financial position, results of operations in accordance with Canadian public sector accounting standards. So those are the accounting standards that all local government or government organizations report under. Here we also have a note here, except for the possible effects of the matters described in our basis for a qualified opinion. So we do have 2 items here. We have the first one here in relation to opening inventory. So as we report on the auditor subsequent to year end, and the prior year inventory not having an opinion on it, we were unable to substantiate where the opening and ending inventory were accurate at year end. And then the second one was in relation to asset retirement obligations. So as a town consolidates its percentage ownership and the Peace Regional Waste Management Company there, we had received information from their statement in relation to their asset retirement obligations. So then there's a qualification there for the valuation on how that was done and in recognition to the value in your financial statements. So other than that, other than those 2 items, everything is audited in accordance with the standard. So when it comes to responsibility and management, those charged with governance for the preparation and fair presentation of the financial statements, and then auditor's responsibility for the audit, which in turn it summarizes our objective, which is to obtain reasonable assurance that the financial statements are free from material misstatements. So this slide here is a snapshot of where you were at as at December 31, 2023. And you'll see your cash and temporary investment position was up about 3.2 million. So you generated 9.5 million from your operating activities, spent 1.1 million on debt repayment, and deployed 9 on natural capital asset additions for a net change of 3.2 million. When it comes to your taxes and grants in place of taxes here, you'll see your current taxes are pretty consistent year over year. A decrease here in your arrears taxes of about 173,000, and then an increase in your allowance here year over year up to 685 from 540, with the net amount of 639. Back to the statement of financial position, you'll see your trade and other receivables down to 6.6 from 8.6. So you had received collected a portion of your MSI and STIP funding from prior years there. So that's down to 6.6. Debt recoverable for local improvements. So you had a new local improvement there. So that's up to 1.4 from 1.3. Increase in land held for resale, and then your investments, which are made up of various GICs with interest rates from 4 to 4.75% and maturing in 2024 there. So that left the town with total financial asset position of 22.8, or a $1.3 million increase from prior year's 21.5. Now, when it comes to your liabilities, so what the town owes subsequent to year end, you have your accounts payable and accrued liabilities here. So that's down to 3.4 million. Really, you had less payables or trade payables for vendors at year end than you did the prior year. When it comes to deferred revenue, so this is in relation to grants that the town has received but is yet to spend on a project. So during the year, you started at 4.9 million. You received 1.6 million. So your 2023 allocations mainly for MSI and the County Community Building Fund. You then recognize revenue in relation to your infrastructure renewal as well as some sidewalk replacements. So that's where the MSI money was spent, which left you at the year end about 3.8 still to be spent in the future periods. Back to the statement of financial position, you got your employee benefit obligation of 246,000, mainly made up of vacation accrual. So what's still owed for vacation pay. Obligations under capital lease of $980,000, so you had a new capital lease there for $971, you had repaid about $164, net change there. And then your long-term debt. So that is up to 22.6 million. Debentures from the province of Alberta make up 22 million of that. You have some other debt in relation to Northern Lights County. Some debt from Vision Credit Union that you have on hand there. So you had no new debt and principal repayment of 1.9 million year over year. So a net reduction in your long-term debt from this year to prior year. When it comes to the town's debt limits, so your debt limits based on the Municipal Government Act are calculated at 1.5 times total operating revenues. So you'll see your total debt limit here up to 47.9 million. Total debt at year end was 22.6, leaving you with an unused limit there of 25 million. And then your debt servicing limit, so how much debt, total principal and interest to be repaid next year. Limit there is about 8 million, debt servicing next year 2.8 million, leaving you with a $5 million unused portion. So the town is still within its debt limits as set out by the Municipal Government Act. The new item here for liabilities this year are the asset retirement obligations. So this was the adoption of Public Sector Standard 3280. So the town portion is made up of lagoon, various buildings, railway assets, and as well as the landfill closure, post closure there. So the total there amounted to about 3.9 million. So this was measured using a present value technique. So the PV was calculated using total undiscounted cash flows of about 4.4 million with assets settled in 2030 to 2074. So the asset retirement obligations always existed within the town. There just wasn't a standard to report them on the financial statement. So yes, there's a new liability here, but again, if you were to retire these assets in the future, this cost would have still been incurred. So what this is doing is it's allowing you to make decisions on these liabilities going forward for expected settlement dates to ensure that funds are available to meet those environmental requirements. And what we're doing obviously is using the best information possible for when these are going to get settled in the future in order to determine a present value calculation at 3.9 million as of today's date. So with that said, total liabilities then at 35 million versus 39, or a $4.2 million decrease. So if you take your total financial assets being A, less your liabilities in B, you end up in a net financial debt position of 12.1 million, which is 5.5 million less than prior year as you've lowered your liabilities year over year and increased your financial assets. Now, when it comes to non-financial assets or tangible capital assets of 133 million, you see the slide here shows you your additions in the year, about 5 million. So the construction in progress here, you have your neighborhood infrastructure renewal program, pavement overlays, as well as the regional hot tub replacement here. So, and then as well as within your engineer structures, as well as your neighborhood infrastructure renewal for road work done, as well as you purchased a loader and about 7 new Chevy Silverados in the vehicles there. So about $5 million in new additions. When it comes to amortization, 6.5 million. So this number represents the usage of your assets in the year. So as you purchase new assets, they last 5 years, 10 years, 20 years. You take a percentage of those assets, they get amortized into your operations as a reflection of the usage of those assets in the year. So adding 5 million of additions and using 6.5 million, the net change there is a decrease in your net book value year over year of your assets. Other non-financial assets, inventory for consumption of 1.1 million, prepaid expenses of 167 left you with a total of 134 million. So if you take that number plus your net financial debt, you end up with an accumulated surplus of 122 million, about $4 million increase year over year, which is the town's annual surplus. So your accumulated surplus is broken up into 3 categories here: unrestricted, restricted, and equity and TPE. So your unrestricted and restricted portion make up the non-tangible capital asset component, or the cash component, they would say. So that totals 15.2 million versus your tangible capital assets of 107. So the change year over year in your unrestricted and restricted is a net $5 million change, and your TCE is a decrease in 1 million. So although your annual surplus is 4, you actually saw a $5 million increase when it came to your unrestricted reserves and a $1 million decrease when it came to your assets. This next slide here is your operating revenue, which is a statement of operations on your financial statements. You see your total revenues in the year were up about 32 million from 30.5. When it came to net municipal property taxes, about a 3.8% increase. So about 1.67 average rate increase and 2% on the assessment. When it comes to user fees and sales of goods, you saw an increase there to 10.5 from 9.2 as you had increased water and sewer rates for the first full year versus the prior year there of 9.2. Other changes year over year and other revenue. Last year, you had a $400,000 other revenue from the Peace Regional consolidation there, where that wasn't there this year. When it came to rentals, you had additional revenue there in relation to arena rentals. And then as well as your penalties and taxes were down to 354 from 444, as you saw the decrease in your arrears tax that you're in there. So again, leaving you at 32 million or a 4.8% increase year over year. And as well up from the budget about 3.7 million to 13%. This pie chart here just kind of gives you a breakdown of where your revenues come from, but really in line taxes and user fees that make up 72%, and then other making up the 28%. When it comes to expenses, so what departments saw the money being spent there. So transportation services of 6.5 versus 7.5. Last year you had your airport support still, so there was 637,000 in there, as well as 300,000 in bad debt. So that's where you're seeing the decrease year over year there. When it comes to administration, you see an increase there. Last year you had a $200,000 bad debt recovery, which caused that number to decrease. That's why you're seeing that variance that year over year. When it comes to culture, you spent about 130,000 on museum roof repairs there, so you've seen a bump in that one year over year. But overall, year over year, you spent about 834,000 less on expenses, so 30.2 versus 31. And then when you compare to budget, because you don't budget for amortization expense, which makes up the variety of the changes there, a total 6.5 million in amortization expense, but your budget change year over year is 5.7. So net below budget there. This chart here kind of gives you a look at where your budget lined up with your actuals. So your actuals make up the light blue, and then the line makes up your budget. So you'll see the line goes across, it's kind of at or above most of the items except for protective services, where you saw additional forest fire evacuation costs there in relation to that being over budget. And then your waste management, which is in relation to your Peace Regional Waste Management Company expenses there, where their budget's not in there. So that's where you see that above. Other than that, everything is at or below the budget there without the amortization expense. Now, when it comes to expenses, so salaries, wages, and benefits in line with the prior year there, below budget, as you're looking to fill some more positions. When it comes to contracts and general services, the 7.6 versus 8.5. So you saw less costs there in snow removal, as well as you had recruitment costs last year, RCMP retro pay, and then as well as the airport costs. So where you're seeing the $1 million change there. Materials, goods, and services were up a bit, 4.6 versus 4.3. Other new items here, you'll see this accretion expense of 375,000. That's in relation to your asset retirement obligation. So every year as that liability increases, you get an accretion expense charge, which is similar to like amortization for your tangible capital assets. It's the change year over year. It's a non-cash item, but it represents that change in that liability increasing. And as well as transfer to local governments, you had a bit more business improvement grants there, the 266 from 118. And again, leaving you with 30.2 million in expenses. So if you take your total operating revenue, less your operating expenses, you end up with the operating surplus in the year of 1.7 million. When it comes to government transfers for capital of 2.4, that really represents 2 million from MSI and 240,000 from the Canada Community Building Fund. Leaves you with total other income of 2.2. So if you add that to your annual surplus before other income, you end up with an annual surplus of just under $4 million. Previously, your accumulated surplus was at 118,487. There's a restatement or adjustment for the asset retirement obligation amount there. Left you with the new OP of 118,337 plus your annual surplus ends the year at 122 million. So in summary here, annual surplus for the year of just under 4 million. Your net financial debt position is down over 5 million year over year as you work towards that net financial asset position. When it comes to our audit findings report, just in summary here, we'll talk about the restatement for the ARO a bit more. modified opinion in relation to inventory and asset retirement obligations. We had no unusual accounting policies or estimates. We had no unrecorded misstatements. And we had no significant difficulties while performing our work for the staff. So I want to thank the staff for their help in getting us all the information we needed in order to complete the audit for the town. And I guess if anybody has any questions on this part, I could take them now before I jump into the other part of my presentation.
Mayor Manzer, go ahead.
Thank you. So as I understand it, this new thing has to do with when assets are replaced in the future, you're trying to calculate the cost of that to a certain extent, plus the cost if they have something that needs to be removed, like asbestos. You're trying to calculate that in the future? That's the whole.
Yeah, so in essence, yeah, so if you had a building and you were going to retire that building, there would be an additional cost associated with removing the asbestos within the building, obviously be the environmental contaminant. There'd be additional cost to, move that to a certain landfill, pay extra amount of fees. So that kind of cost is being calculated based on if you were to retire it today. So you're trying to determine an amount so that when you do sell that asset in the future, you already have that cost already in the liability. So there's not a direct hit to the bottom line, or there's no surprise in that, oh, we owe extra money to retire this asset because you're already aware of that.
So, how to say this? If, does this seem to be, a large amount for the town of our size, or small amount, or?
It's not the largest, it's not near the largest ones that I've had for clients this year, but yeah, I mean, I think anytime when you're associated also with landfill, there's definitely, depending on the age of it, the size of it, and kind of how that's being calculated, it could definitely affect the town's ARO. But as for your assets, I don't think there's too many pretty common ones that I've had from other towns as well that I audit. So nothing really. Nothing out of the norm, or you don't have any AROs that are different than anybody else, right? You would have similar ones, depending on your region and what you have in your town, but yeah.
So does this item speak to whether we have young assets or old ones? Is that part of it?
Yeah, I mean, if you had a lot more older buildings that had asbestos, you'd probably maybe see a larger amount versus obviously if anything was built post 1970, likely won't contain that. But yeah, again, it'll all depend. I don't think your number is out of the norm, but yeah, definitely if your assets were newer, your number would be a lot smaller. But again, there is that landfill component in there, so.
So with respect to the landfill, this regulation applies to them as well. And I'm understanding that there was, you needed more information from the landfill to, I don't know, accurately record what Peace River has on that budget line or that line?
Yeah, so so previously the landfills were recorded in a different section of the handbook where you would get an estimate done by an engineer or a third party, and then you would calculate, you would future value that amount, and as well as discount it back and record it. With the ARO component, it's calculated a bit different in a sense of there's an amount that's recorded in tangible capital assets in relation to the landfill that gets amortized out. And then there's also the portion of liability that increases as well. So in relation to the handbook change, the calculation on how the liability is determined and then how it's reflected in your financial statements is different than what it previously used to be.
So that can be fixed next year by the landfill going through that process and recording it, I guess? Okay, and the other thing I thought I heard you mention was something about inventory, or Was there?
So when it comes to the inventory, you do have inventory on hand, but we were unable to kind of do an inventory count to ensure that the inventory was, being counted and that the valuations and stuff were accurate. And then because the previous year was qualified as well, without having the opening one, we couldn't really we couldn't really audit the amount to let you know if it's materially misstated or not. So that's where the qualification comes from on that specific item.
So how in 2024 will we not have the same issue?
Well, that may not happen. I mean, I think you're probably gonna be looking at having another qualification for the inventory just because this year's ending, which would be the opening for next year, we weren't able to perform that work as well. So we're hoping for next year to be able to do work over the inventory count and evaluation, so that the following year from that, we'll have 2 years of good audit evidence to make sure that the change year over year and the ending balance is accurate there.
Counselor Good?
Just a question from my understanding. So the qualifications is exactly that. It's a no opinion. It's not saying that it's wrong. It's not saying that it's right. It's saying you don't have enough information to make that.
You betcha. We just can't substantiate it if it's, materially misstated or not.
Okay,
Yeah.
that's fair. Thank you.
Yeah, we can't give you an opinion if that 1.1 million is accurate, or if it should be, 1.5 or 500.
Director Munkert?
Just to expand on that point a little bit, so previous year, so 2022's audited financial statements, that was the first year that we reported any inventory on the books. So at that point, we performed inventory count. It wasn't exhaustive of all of our inventory. We're going for.
Sorry for the interruption. I'm not seeing Mayor Manzer. Did we lose her?
I didn't click anything.
Don't finish recording, she's gone.
Go ahead.
Yeah, so as Jeff had said, we're anticipating that we'll still have a qualification on inventory for next year. And August plan by 2025, we shouldn't have that anymore because we'll been able to receive, or the auditor will be able to receive reasonable assurance in terms of quantities and valuation and that sort of thing.
Is there any other questions from council? Go ahead.
Okay, well, this is the qualitative portion of our work here. So kind of just our audit findings for the work that we have done. So when it comes to this report here, really it's the purpose of it is to promote two-way communication between ourselves as the auditors and yourselves as counselors. So as of today's date, we'll complete our subsequent event procedures. We'll obtain a signed management representation letter. We'll complete our communication, which is what we're doing right now. And then we'll obtain evidence of council's approval. Once we have all those things, we'll be able to issue signed audited financial statements. When it comes to changes from our audit plan, so the only change was in relation to our materiality, as we initially calculated based on prior year's actual and then adjust to current years. Should I admit?
Yes, thank you.
You're welcome.
Sorry about that.
Hello, Madam Mayor. How you doing? Oh, here she goes. So when it comes to materiality, we use 4% of operating expenses as our benchmark for our materiality. So what we're here is $1 million. So what we're saying is if your revenues or expenses were to say increase by $1 million or decrease by $1 million, we feel a user of the financial statement may have a different view or outlook on the financial results or performance of the town. So again, users being yourselves as the counselors, municipal affairs, those organizations, whether that's of interest. When it comes to our engagement team, so myself and Craig Pater, the leads are responsible for the kind of the management role services of our firm, including the audit. When it comes to audit results, I'll go over a few of these, but really the main one here is management override of control. So management's in a unique position to potentially perpetrate or manipulate the financial statements, whether due to fraud or error. So that could be to conform to budget that's approved by council or increase the annual surplus. So what we do is we use data analytic tools that identify journal entries that have been posted throughout the year that exhibit key characteristics that may be indicative of that behavior. So then we would then test those entries. In doing that, we didn't identify anything of significance, and all those entries were in line with adjustments to be made. When it comes to revenue recognition, we want to make sure revenue is being recognized when any performance obligations have been met. So here we're looking at all your grant agreements. We're looking at what costs have been approved for, auditing those expenses. Also tying that back into your deferred revenue or receivables to make sure that that's complete. So we had no findings in that area. Other key areas here. Now we want to make sure that your tangible capital assets really are accurate at year end. So it makes a big amount on your statement of financial position. So making sure that items that have been capitalized meet the definition of a tangible capital asset, items that have potentially been expensed, doing work over that to see if they should be capital, or do you have any items that are impaired that should be written down? So while performing our work there, we're looking at your tangible capital asset policy. We want to make sure also we're testing additions, disposals, recalculating your amortization and gain loss. We're also looking at your budget. So what did you approve from budget in relation to capital from what you were spending on, and how did you fund these projects in approval there? Was it through taxes, reserves, or through grants, and then making sure that that is accurate with what council's approval is there. So we had no findings in that area. When it comes to asset retirement obligations, so really a risk for us here is that it's a new handbook section. So making sure completeness is there. So with enough work done to ensure that we have obtained all the asset retirement obligations that should be reported, were they calculated in accordance with the correct rates. So we did restate for the asset retirement obligation as we used the modified retroactive restatement approach, which was also given as guidance from municipal affairs there. And then in addition, we also have significant qualitative aspects from the accounting policy to discuss in our report. When it comes to inventory for consumption, again, we want to make sure the balances that are measured are not incorrect. So looking at balances that you have on inventory, performing an account there and making sure that's accurate. So we do have a significant qualitative aspect of the accounting policies there. When it comes to misstatements, so we have posted 17 audit adjusting entries during the audit there. So it netted a $5.8 million increase to assets, $2.9 million increase to liabilities, 517 decrease to accumulated surplus, and then annual surplus change of 3.3, which in relation to those changes. We have no unrecorded misstatements to note when it comes to the year-end financial statements. So when it comes to the restatement here, really in relation to the asset retirement obligation. So we increased the net book value of the tangible capital assets by $286,000, and AROs by 3.5, and then as well as the opening accumulated surplus there by 121. When it comes to control environment, we didn't encounter any significant difficulties as we brought the attention to council here. Again, just the asset retirement obligation adoption here and in relation to the modified retroactive restatement approach. So when it comes to the change here in relation to the Peace Regional Waste Management Company, so they had adopted 3280 as well. However, upon further review in relation to our group audit work, we're unable to satisfy ourselves that it was appropriately adopted by the company. So as such, we're unable to determine what the implications would be related to the standard as at and for the year ended December 31, 2023, with the impact of this omission on the expenses, annual surplus, consolidated statement of operations. So again, we're saying in relation to the work, the information we had received, we were unable to give an opinion that the amount that we're reporting on the town's financial statement is complete and accurate, which has given rise to our qualification there. So when it comes to inventory, again, I kind of touched on this, but just in relation to not being able to observe physical count of the inventory in the prior year there, we're just indicating that we're unable to determine that the ending amount is accurate. So our indication to a modification to our statement. And then significant qualitative aspects of the accounting estimate. So we're satisfied with your estimates. We feel your allowance for doubtful accounts, the valuation of tangible capital assets are in line with your policies. When it comes to the management letter, we'll be issuing one of those for non-significant items that we had noted when performing our work. When it comes to appendices, appendix 1 here just required communication for our independence. We not hold a financial interest position, have a personal or business relationship or economic dependence on the town. Our management representation letter is in appendix 2 here, and this is what we'll get a signed copy from management for, where we can release audited financial statements. And then the last part here is appendix 3, which is new and revised accounting standards. So what this means is that next year there's 3 new accounting standards. So public sector 3,400 for revenue, you'll see some additional disclosure requirements possibly to your financial statements. And then another large one 4 years from now, which is public sector 1202, which is your financial statement presentation. As the statement of your financial statements will change from the way they look now. So you'll have your financial assets, you'll have your non-financial assets, which are currently at the bottom of your financial statement. They will move back up to the top of your financial statements. So you'll go financial plus non will equal total assets. You'll then have financial liabilities, non-financial liabilities, which will be your total liabilities, and then you'll have net asset components. So liabilities plus net assets will now equal assets. You'll have a traditional balance sheet approach for the fiscal year ended December 31, 2027. You'll also see a financial asset statement where you just take your financial assets less your liabilities. You'll see your financial position there. You'll see a statement of operations, and then you'll see a statement of net assets, which will be made up of your current accumulated surplus, so unrestricted, restricted, and equity and TCA, and then as well as remeasurement gains, losses, if you have any financial assets or liabilities that have a fair value component there. So yeah, that's another one coming down 4 years from now. And I guess that's it for my audit finance report. So if anybody has any questions on that, I can definitely take those.
Thank you for your presentation. Is there any questions from council? Your worship, do you have any more questions or comments?
No, thank you. I think I got my questions answered earlier.
Thank you much for your presentation. So moving on, we're now into new business. Item number 1, 2023 audited financial statements with Director Mugford.
Thank you, Councillor Ford. Good evening, Madam Mayor and Council. That issue is the approval of the 2023 audited financial statements. So the MGA requires that we have an audit done based on our prior year's financial performance. Just had a presentation from our auditor to review the results and an opportunity for you to ask any questions you had regarding the statements. So attached are for Council's approval. Draft of the audited 2023 consolidated financial statements. Options are, option 1 would be to approve the 2023 financial statements, which ensures our compliance with the MGA. Option 2 would be to decline approval, which has no advantages and would result in failure to meet our requirements under the MGA. It's also potential borrowing issues and additional professional fees which we incur for extended audit services if that was to be the case. The recommendation from the administration is that council approve the audited 2023 consolidated financial statements. I'd also like to make a few other comments. Recognize some specific contributions made in bringing the audit to a successful completion. This is our first year with Metrics as our auditor. Whenever there's a transition between auditors, the new team brings fresh eyes and different viewpoints on risk, controls, and best practices. Credit to Jeff and his team for their professionalism, hard work, and commitment to meeting our deadlines. I'd also like to commend our finance manager, Roxanne Guidon, and her finance department staff completion of the year-end audit is a significant undertaking, especially in years such as this where there are new accounting standards that are being implemented. Roxanne and her staff worked many long hours to ensure that our books are as accurate as possible and her deadline is met. Great job, Roxanne. Also, thank you to our HR and payroll staff and all staff that were involved in the audit. As mentioned, one of the new standards this year, as retirement obligations require contributions from across the organization. The town went out for proposal for this undertaking, and with the assistance of Darren Laviniak and his team from Deloitte, along with Director Fisher and his staff, we were able to complete implementation of the standard, and those results are reflected in the statements. Under the guidance of CAO Miller, we continue to implement process improvements to both our budgeting and reporting processes. The town continues to implement and execute fiscally responsible budgets. In the past 2 years, the town's net debt position has improved from negative 21 million in 2021 to negative 12 million in 2023. We continue to pay off debt from 25.3 million in 2021 to 22.6 million in 2023. And on reserves and accumulated surplus, the town has gone from an unrestricted deficit in 2021 of 6.4 million down to approximately 860,000 in 2023, while restricted surpluses have increased from 10.9 million in 2021 to 16.1 million in 2023. There's several factors, ups and downs, but a few that I'll note. Improved accounting practices, being consistent with public sector accounting standards, including recognition of revenue or of inventory rather, and improved grant reporting. As part of our budget process, we eliminated contingencies in the budget that were previously being reported and we've been actively reducing waste. There's also of note improved financial position with Peace Regional Waste Management Company. So as a result of their improved performance, we pick up 3/7 of that when we consolidate. Also, we didn't spend as much in capital last year, so our amortization expense exceeding our reserve-based capital spend will result in a reduction in the unrestricted deficit. The town can build on its reserves for future capital replacement needs, and as part of making that change, one of the major things that we did starting in 2022 was the change to our utility structure. We're requiring that our utility funds self-liquidate. So those improvements are being reflected in our books. The town's financial position continues to improve, and we hope this progress will continue in the coming years. Thank you. And at this point, I will pass over to CAO Miller for her comments, and then I'll take any questions.
Thank you. Thanks, Jeff and Maris and Sam. Council, I just have a few things to say, and that I guess starting with organizationally, the town is on a transformational journey, and that includes greater fiscal awareness, stewardship, and continuous improvement in our daily work. The financial results as presented through the audited financial statements that are here for you for adoption are a testament to the financial progress we're making. As mentioned, we're maintaining increasing levels of service while reducing our net financial debt and eliminating our unrestricted reserve that was unfunded. So all staff in the organization have contributed to this evening's good news story, and I truly can't wait to see what this year brings and the successes that we see. I do want to say thanks, Rox, and to your team, because it's a huge amount of work. I've lived it, I know it. Thank you, Sam, as well, for the support that you give to them. And workload is heavy, but we can all celebrate after we get an adoption. Thank you. And thank you.
Thank you, CAO Miller, and thank you, Director Mugford. I saw Mayor Manzer's hand up earlier, so go ahead, Mayor Manzer.
Thank you, Mr. Ford. I think I was doing something with the mute button. But I'd like to thank staff for all their work and the coordination with the new accounting firm, and onwards and upwards, I guess.
Is there any other comments or questions from council? Seeing none, I'd be looking for a motion for item 1, and I'm actually, being that the mayor doesn't get to make motions very often, Mayor, would you be interested in making a motion on this item?
By all means, I move that council approve the audited 2023 consolidated financial statements.
All in favor?
In favor.
Motion carried.
And Mr. Ford, I have another motion or two I'd like to put forth.
Now go ahead, Mayor.
It's with respect to the audit and inputs, I guess. I would move that council write the waste management company and make the issues known with respect to the new, I don't know what to call it, the new asset management process. Mr. Mugford,
Asset retirement obligation standard.
okay, that sounds good. And I can, the other has to do with the timing thing, so maybe I'll put that in a separate motion.
Ms. Parsons, do you have the mayor's motion?
Move that council write the Peace Regional Waste Management Company knowing the new asset retirement obligation standard.
Okay, thank you. Any questions? All those in favor?
In favor?
That motion is carried. Mayor Mazur?
I like making motions here. It's good. The second or the third one would be, I would also like the waste management company to be asked if they can move their auditing procedures forward so that basically the town and all the municipal partners have more time to consolidate the statements. And I don't know if I should suggest a date or just leave it at that. Mr. Mugford, I look to you to give me direction.
Yeah, I mean, I'm not sure specifically the date, that we want to request of.
Does April 1 make sense? Like, I don't know.
I mean, I don't think there was any issues in regards to the timeline this year of consolidation. In previous years, it's been a little bit tighter. But certainly April 1st would give our auditor ample time to complete their consolidation.
Yeah, so that things could happen at a regular council meeting with respect to accepting the audit. That would be my reasoning for this. So my motion is that the council write a letter to Peace Waste Management Company indicating that they would appreciate the audit information from the waste management company at an earlier date to facilitate our consolidated statements and reporting to council. Maybe that will do.
Okay, thank you, Your Worship. Ms. Parsons, you have that motion captured?
So that council write the Peace Regional Waste Management Company asking them to conduct their annual audit processes earlier in the year to better align with consolidation into our annual financial statements and presentations to council.
Thank you. All those in favor?
In favor.
That motion is carried. Thank you. Moving on the agenda, comments from the public. Not seeing any comments, and I'm looking for one more motion, and that would be for adjournment.
I'll move council adjourn the meeting at 5:50.
All those in favor?
In favor.
That motion is carried. Thank you, everybody.
Good night, everybody.
Good night.
Good night.
That could be good.